You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Thursday, 4th day of January, 2024. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. And a reminder, because it is Thursday, if you are a member, the members only workshop is tonight, as it is every Thursday night at 8 p.m. Eastern, except for the occasional holiday where we take the night off, as we did last Thursday. So, members, have your questions ready, and we'll get them answered for you. Okay? All right. This is our second live broadcast of the day. First live broadcast, each and every day, is our live training room. Now, that opens at 9:15 a.m. Eastern and remains open until 11:30 a.m. Eastern. It's an interactive training environment in live markets. So we're trading real markets with real money in real time while you trade along and ask questions. That's how you learn. You can read a book, but if you have a question, it might be hard to get a hold of the author. If you're watching some video and a question pops into your head, who are you going to ask? 9 out of 10 new traders fail because they don't have someone to teach them to take them literally by the hand and step by step teach them how to do the job. We do that for our members every trading day, 2 hours and 15 minutes. Now, when the live training room ends, we take a 30-minute break, and we come back at 12 noon Eastern for this broadcast, which, unlike the morning broadcast, which is reserved for members only and those taking their 1-week free trial, this broadcast is open to the public. Everybody everywhere on planet Earth with an internet-connected device. Now, if you haven't taken your 1-week free trial, you can do so by going to mytradingiq.com. And at the top of the page, there's a link that says 5-day free trial. It really is free, and it really doesn't matter what day of the week you sign up. You might think, well, gee, it's already Thursday. Maybe I should wait till Monday. I got a better idea. Get signed up today. Get your desktop set up and indicators turned on today. Then, tomorrow, Friday, that would be the first day of your trial. You can ask enough questions so that you get familiar with the indicators. Then you have the entire weekend to experiment and get to know them. And then you still get 4 more days next week. Pretty sweet, right? I think so. And then at the end of the trial, you're able to make a well-informed and intelligent decision as to whether or not trading is right for you. And I didn't mention it, no credit card required. just a desire to actually learn how to trade. If you're looking for some get-rich-quick scheme, we don't have any of those. There are none, right? But if you've been down enough blind alleys and wasted money on things that just didn't pan out, and you've gotten to the point where enough's enough, you're sick and tired of being sick and tired, and you just want to learn how to trade, well, you've come to the right place. Because not only do we train 2 hours and 15 minutes every trading day, but our members have access to unlimited one-on-one private mentoring and around-the-clock support via Telegram. If you find that anywhere else, let me know, okay? I'm curious. Okay. Now, how do you join this afternoon broadcast? What's the best way? Well, the best way is to go to mytradingiq.com, scroll down to where it says afternoon broadcast. Click the link, complete the 30-second registration form, and you're done. What'll happen going forward is every day about an hour, every trading day about an hour before this broadcast starts, you'll get an email. In the email, there's a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform. Why is that important? Well, because it gives you access to the question box, so you can ask questions and participate in the discussion. Now, there's going to be days you're out of the office, away from the desktop, but you would still like to join the afternoon broadcast live. You can. And there'll be days when you're busy and can't join live, but would like to get caught up later. You can. Talking about our YouTube channel, youtube.com/CFRN. That's all you have to remember, because you already know the youtube.com. So just remember /CFRN. Not only do we broadcast live every trading day on our YouTube channel, but we also archive every daily broadcast. Currently, there's over 2,300 daily episodes archived for your educational and viewing pleasure. And if you're new to the world of CFRN, it's a great way to get to know who we really are. Not just today, not just this week. Thanks to YouTube, you can scroll back 6 weeks, 6 months, a year, 2 years, even more. Now, of course, you're not going to listen to them all or watch them all, but just pick some days at random. Listen in for a bit. You'll quickly discover the thread of connectivity, the thread of continuity that's woven through each and every daily broadcast and our very vibrant trading community. youtube.com/CFRN. Okay, let's get going. We'll start with our daily devotional and a word of prayer. We'll get into the markets. Our topic for the past week: managing money and wealth. What the Bible says about that. Our scripture today is Luke chapter 12, verses 32 and 33. I'm going to share with you from the Message translation. What I'm trying to do here is get you to relax. Not be so preoccupied with getting so you can respond to God's giving. People who don't know God and the way He works fuss over these things. But you know both God and how He works. Steep yourself in God reality, God initiative, God provisions. You'll find all your everyday human concerns will be met. Don't be afraid of missing out. You're my dearest friends. The Father wants to give you the very kingdom itself. Be generous. Give to the poor. Get yourselves a bank that can't go bankrupt. A bank in heaven, far from bank robbers, safe from embezzlers. A bank you can bank on. It's obvious, isn't it? Place where your treasure is the place you will most want to be and end up being. Again, that was Luke 12, actually verses 29 through 34. So, yesterday, your worldview about Christian wealth management was possibly turned completely upside down and inside out. If you missed yesterday's broadcast, you might want to go to the YouTube channel and check it out. Jesus' teachings were radical at the time and remain so today. Unfortunately for us, our ideas of wealth and wealth management are largely dictated by the world's view, not the Bible, and not even Jesus himself. Imagine with me for a moment what Jesus might say or do if he were to sit beside you the next time you review your portfolio or make an investment decision. What would he say? Would he check your investments against the metrics of the quadruple bottom line that is popular in Christian circles? Or would he just stick with his suggestion of giving it all away? Do not be afraid, little flock, for your Father has been pleased to give you the kingdom. Sell your possessions and give to the poor. Provide purses for yourselves that will not wear out. A treasure in heaven that will never fail, where no thief comes near and no moth destroys. In Matthew 19:21, you want to be perfect, sell your possessions and give to the poor. You will have treasure in heaven. Some people get really freaked out about that. God doesn't want you sending your kids to school with holes in their shoes. He doesn't want you going to church on Sunday morning or whatever day you go, with the hubcap falling off or the fender falling off as you pull into the parking lot. I mean, what good father would take pleasure in putting his family in such a vehicle or sending his child to school, and, well, I almost said ragged jeans, but you got to pay $150 for those ragged jeans these days. You can still buy regular jeans for $20 at Walmart on sale. Go home and rip them up yourself, if that's your style. But anyway, back on point. No, God doesn't want you to be broke. He doesn't want you to be poverty-stricken. But you have to ask yourself, at what point is enough enough? There's lots of people in the world who have money sitting in vaults, in computers, etc., gathering dust or digital dust. Money they will never spend. I mean, they could go on a spending binge, and their money will make more money faster than they can spend their money. This is really what this passage in Scripture and thought is all about. Every good father wants the best for his children, and God wants no less for you. But you got to ask yourself, when is enough enough? Now, back to where you and Jesus are looking at your portfolio. Maybe there's something special about your portfolio that Jesus would compliment you on and encourage you to continue as is. After all, maybe you worked hard to earn it, or maybe you're very diligent about how you invest it, aiming to check all the boxes of the quadruple bottom line theology. And everybody started Googling. I'll say it again so you can get it right the first time. Quadruple bottom line theology. Okay? Sadly, we already know that Jesus would give us the same message today as he did 2,000 years ago. Give it away. Help the poor. Build your treasure in heaven, not on earth. That's impossible, isn't it? Yes, it is. And Jesus recognized that too. Jesus looked at them and said, with man, this is impossible, but not with God. All things are possible with God. Mark 10:27. So here we are, firmly wedged between a rock and the proverbial hard place. We want to follow Jesus. We want to be Christ-like in all things. And yet we cannot bring ourselves to just give it away. Now what? Let's go back to the Bible. Consider this message from the Apostle Paul as a jumping off point for your own planning and thinking with regards to the wealth that has been given to you. This is 1 Timothy chapter 6, verses 17 through 19. Command those who are rich in this present world not to be arrogant, nor to put their hope in wealth, which is so uncertain, but to put their hope in God, who richly provides us with everything for our enjoyment. Command them to do good, to be rich in good deeds, and to be generous and willing to share. In this way, they will lay up treasure for themselves as a firm foundation for the coming age, so that they may take hold of the life that is true life. Not quite so radical as Jesus, nevertheless, solid Bible teaching on which we can begin our wealth management journey as Christians. Tomorrow, we'll seek out a practical blend of what Jesus said and what Paul taught. Join me in a word of prayer. Heavenly Father, as we come in prayer, our hearts are drawn to the words in Luke 12. Lord, we thank you for the assurance that it is your pleasure to give us the kingdom. In a world often filled with anxiety and uncertainty, help us to anchor our trust in your provision and care. Grant us the wisdom to discern the value of our possessions and the courage to let go of the things that hinder us from fully following you. May our hearts be generous, ready to sell and give to the needy, storing up treasures in heaven that last for eternity. Lord, teach us the beauty of simplicity and the joy of sacrificial giving. May our lives be marked by a reliance on your provision. And may our earthly possessions never take precedence over our commitment to your kingdom. It's in Jesus' name we believe and pray. Everybody said, amen. Amen. Happy Thursday. Hope it's a happy Thursday for you. Whoever you are, wherever you are, let me give you the numbers from around the world. We'll start here in the U.S., the cash markets, or the indices as they're called. Currently, the Dow's up 171 points. The NASDAQ is down 11. S&P 500 is up 8. The Russell 2000 is up almost 3. There go those mixed markets again. But the NQ is only 13 points in the red. The other 3 are in the green. Not by a lot, but they are in the green, so we'll see how things develop as the broadcast continues. In the commodity basket, crude oil down $1.57, trading 71.13 last. That's a drop of over 2%. Gold bouncing back up $8.60, trading 20.51.30 last. Silver up 3 cents, trading 23.18 last. In the Asian markets at the close, the Nikkei dropped 175 points. Shanghai fell 12. The Hang Seng basically unchanged on the session. And in the European markets at the close, FTSE up 40. The DAX up 78. The CAC up 38. You know, I don't remember the last time we had a mover or shaker in the European markets. Just kind of dawned on me. Oh well. So we had a red day in Asia. It was a green day for the UK. And it is a mixed Radio Thursday here in the US of A. With the NQ, the only major index in the red, and only in the red by 12 points. But the Russell, let me add, is only in the green by 3 points. So we'll see how things develop throughout the broadcast. Let's go to Logic 247. That's our 24/7, round the clock, E-mini alert service. We are in week 283 since we launched Logic 247. Now, it's not just E-minis, it's also crude and gold and silver and euro and bonds. Over the last 283 weeks, we have issued over 15,800 individual handcrafted alerts. And by the grace of God, we've averaged 20% or less of the alerts being stopped out based on market structure and a very simple process that I teach all of our passport holders in their unlimited one-on-one mentoring sessions. Now, this recap was done by Valerie at 7 a.m. Eastern this morning. Since then, a lot's changed. Some of these that were waiting have resolved themselves, and I have also put out some additional alerts. So this afternoon, be on the lookout, because about the time the markets close is usually when she updates the recap. And then again, right before she goes to bed, she updates it again. Okay. So this morning, this is where we stood at 7 a.m. Now, normally the markets open Sunday night at 6 p.m. Eastern. But again, this week, because of the Monday holiday, they didn't open until Monday night at 6 p.m. Eastern. So since the markets opened Sunday night at 6 p.m. Eastern until 7 a.m. this morning, we had issued a total of 38 alerts. 3 never triggered. We were still waiting on the outcome of 6. And again, some of those have resolved themselves. So that gave us 29 actionable alerts, of which 5 or 17% would have been stopped out based on that risk profile I just discussed. Pretty good week for a holiday week. We are grateful. Now, the logic alerts can come out around the clock, 2 a.m., 2 p.m., because futures trade around the clock and we have traders around the globe. When an alert comes out, I have built time into it. For you to get the alert, study your 30-minute chart. See the window of opportunity that the alert represents, so that when price gets to that window of opportunity, you'll be prepared to take action by using everything that Michael teaches you each day in the live training room. The logic alerts are also based on current price action. But again, you've got plenty of time. Get the alert, go to your 30-minute chart, see the window of opportunity. The more times you repeat that process, pretty soon you won't need me to show you the window of opportunity. You'll start to see it yourself. And once you start to see it, you can't unsee it. Okay? The purpose of the alerts is not so you can just trade them and not have to worry about learning how to trade. I created the alerts to help you learn how to trade. Now, long before Logic 247 was even a twinkle in my eye, we had the concierge trade alerts, or the CTAs. And they're different in a couple different ways. Number one, they're based on historic price action. Number two, they don't come out around the clock, 24/7. They're posted as a static report shortly after the Globex open. So last night, the Thursday session began at 6 p.m. Eastern. 10 minutes into the session, I published this report for all of our members, all of our traders, and our trial members. So keep that in mind when we go to the charts. They had all this information 10 minutes after the open. Okay? So what do you do with these numbers once they're published? Well, number one, only worry about the markets that you actually trade or are trying to learn how to trade. We'll use the ES as an example. When this report hits the press or the newsstand, make note on your 30-minute chart where price is at this time. Okay? It will always be between these two numbers. Then draw a line in the sand at the long target. Draw a line in the sand at the short target. Those will serve as great visual cues to help you stay on the right side of the street. When we go to the charts, you'll see what my lines in the sand look like. You can make yours look any way you want. Now, beyond that, if price gets above the 30-minute BBC, it's attempting to reach the long target. If price gets below the 30-minute BBC, it's attempting to reach the short target. It's pretty simple. Now, the BBC, when we go to the charts, whether it's the daily chart or the 30-minute chart, you'll see a green line on my charts. It's called the BBC, Bull Bear Cross. If price gets above the green line, we're bullish and anticipate higher prices. Price gets below the green line, we're bearish and anticipate lower prices. Doesn't matter really what time frame. It could be 5 minutes, it could be a tick chart, it could be a range chart. Price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over, again and again, never-ending cycle. If you are new, it may look like chaos. I assure you, it is not. Now, on the Logic 247 alerts, those will typically have multiple targets. There will be an initial target designed to help you just get your goal for the day and then put the mouse away. But in most cases, there will be a second target, a third target, a fourth target, and a final trade to target. The final trade to target is the weekly trading zone below if it's a short alert. If it's a long alert, the final trade to target will always be the weekly trading zone above. Now you got to learn how price behaves at a weekly trading zone. It's important because price is always trying to reach a weekly trading zone. If price is above the 30-minute BBC, it's trying to reach the weekly trading zone above. If price is below the 30-minute BBC, it's trying to reach the weekly zone below. Only 3 things can happen when price encounters a weekly zone. 70% of the time it will be consolidation. 20% of the time it will be rejection. 10% of the time it will be what we call the slice. That's where price slices through a zone on the 30-minute chart, like it's not even there. When that happens, typically as that move runs out of steam, price will retrace to the zone it sliced through and then continue in the direction of the slice. We've published the zones since December 14th, 2009. So we have quite a history, all documented. Once you really understand the power of those zones, they will become one of the most important tools in your trading toolbox. They're published on a normal week, Monday morning at 6:15 a.m. Eastern. When Monday's a holiday, it's Tuesday at 6:15 a.m. Eastern. Either way, once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. Beyond that, you just got to resist the urge to make it more complicated than that. As long as you know which way the wind's blowing, it's pretty simple to reach your goal for the day. Now, because this broadcast is open to the public, if you want to grab a screenshot, you can. And if you're watching after the fact on our YouTube channel, youtube.com/CFRN, just hit the pause button on the video and jot down the numbers important to you. Before this broadcast ends today, we will cover each one of these individual markets and see exactly what happened with these various targets. Okay? And keep in mind, all of our traders had them last night, 10 minutes after the open. From here, we go to the daily chart. Why the daily chart? Because the institutional traders, the ones who actually move price because of their account size, they look at daily, weekly, and monthly charts. The way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. So no matter what you trade, you may not trade the S&P, okay? You might trade an individual stock, a crypto, a forex pair, an ETF. Doesn't matter. Spend 2 minutes with the daily chart of whatever it is you're about to trade. And I promise you, your trading results will change. Maybe not instantly, but pretty short order. Looking at the daily chart allows you to identify where the major areas of support and resistance are. I published a pretty long post last night in the discussion group. Let me go find that. Okay. I posted this chart. Price is attempting to bounce, and it may, but keep in mind the obstacles are potential resistance overhead. The 38% fib, the step line, red and falling, the 50% fib extension, which is also the most recent swing high. If the daily BBC fails to hold as support, the next potential major support is at the 24% fib extension. Below that, the low of December 12th, then the low of December 11th, then the 24% fib retracement, then the low of December 8th, then the low of December 7th. Okay, now I gathered all that information by simply looking. Here's the daily BBC. Remember, bull bear cross, bearish below it, bullish above it. We've been waiting on this pullback for a long time. We know price always reverts to the mean, and the pullback holds more often than not. Okay, so far this pullback is held, but earlier in the day we had a green candle all the way up to the top of this wick, but confidence seems to be waning because now we've got a doji, which represents indecision, sitting right on top of the daily BBC. If there was ever a chart that said this thing could go either way, you're looking at it, okay? But here's the deal. No matter what those websites and emails say, nobody knows what's going to happen next in the markets. It's not possible. There are too many participants. And any one of those participants can pull an order, place an order, spoof an order of gargantuan size just because they feel like it. So there's no indicator, oscillator, or algorithm that can go out and read all the market participants' minds, come back, compute, and just as it's computing, one guy changes his mind. See, it's foolishness to chase a holy grail that doesn't exist. The only holy grail in trading is you learning how to read the chart and learning how to trade, which is what we teach. So we got indecision sitting on top of support, resistance at the 38, the step line, red and falling, and the 50. Support if we drop below the BBC at the 24% fib extension, and then this low right here, this low right here, and then you're at the 24% fib retracement. See these lines that stretch all the way across, those are the fib retracements. These are the fib extensions. Both are based on 14th century math, the same 14th century math, just applied in a different way. One tells you where to expect support, the other where to expect resistance. As price was climbing, it took 1, 2, 3 days to get through that 38. And then 2 days we tried to get through the 50, couldn't do it, rolled over. So now we have red and falling overhead, step line overhead. That's pretty bearish. In order for price to move higher, it's got to overcome this obstacle, then this obstacle, then this obstacle, then this obstacle. Path of least resistance is to the downside, okay? But remember, nobody knows what's going to happen next. But you will learn, if you stick around, you will learn to be able to look at a chart and know with a great degree of certainty what the next high probability move is. Now, does the next high probability move always happen? Well, out of the 15,800 Logic 247 alerts I explained earlier, we've had 20% or less on a weekly basis be stopped out based on market structure and that simple process I teach all of our passport holders. So, no, there is no way to know with complete certainty what the next move is going to be. But it is quite simple to know what the next high probability move is. Just know that on average, 20% of the time, the market will do something other than what you expected it to do. Now, this is after you learn how to read the chart, after you learn how price flows, and once you understand how markets work. Okay? All right, Michael should be here any minute. So when he gets here, he's going to give us a recap of the live training room this morning. We're going to go live on the TradingView platform for 30 minutes. Then I'm going to come back and finish this recap. The vertical line separates today, Thursday, from yesterday, Wednesday. Back over here is Tuesday. When price drops to a weekly zone, we expect support. And that's what we got. And so this was the opening candle last night, right here. 10 minutes into that candle is when the CTA targets were published. So price goes sideways and then gets trapped. Resistance overhead, support below. We come up to the BBC and consolidate for hours. Then we finally make the drop that takes us to the target. When the market, now this zone is 47.42/43. And the low of this candle is 43.25. So we missed touching the zone by 1 tick. Okay. When the market finds support, it will go look for resistance. Pull back to the BBC holds more often than not. See it here, 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 here. You get the idea. We drop to the zone, which we expect to be support until proven otherwise. We spiked it a bit, but we never let go of it. See how both of these candles are touching the zone, okay? So now we get above the BBC, and we do make a run at the long target. We don't quite get there, but this candle opened at 47.55 and ran up to 66.5. There's 10 points in that one candle right there. Your goal is only 2 points a day. You could have got that here, 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 or here. Come right back down to the target again. Michael, let me know when you're ready. On the Dow, this is where we opened last night. We did the same thing. We got between support and resistance. It was really some wide-ranging consolidation. We finally reached up and touched and spiked the weekly trading zone. Now remember, we expect that to be resistance until proven otherwise. Okay. Just like here, support. Got support, it bounced price all the way back up here. But the second time it managed to get through. Okay. So we go from support to resistance back to support. See all these candles here, the low is the same. That's a pretty good support area, huh? This candle coming down, if I were going to sell a break of the low of this candle, where would my target be? It would be before I got to those lows. That would be more than enough room to get your goal of the day. Now, keep in mind, this candle is still sitting on top of the zone, 37,790/95. And there's 11 minutes left in the life of that candle. So the next candle, when it opens, it could start printing green and head back up to this zone. Or it can start printing red. Price is always trying to get to a weekly trading zone. From the moment the markets open till they close. Now we hit the long target. We spiked the zone 940/945. Why did we stop here? The answer is always in the chart. Okay. So down we go. And why are we sitting where we are now? Because of the zone that was published Tuesday morning at 6:15 a.m. Eastern. Okie doke. Michael is running late today. There he is. Okay.
I'm here.
All right.
Yeah, I'm here.
All right, guys.
So
We will complete the recap. Once we're done with the recap of the live training room and 30 minutes on TradingView, we will finish. As I said, we'll get through every one of those markets that I showed you the list of.
All right. might be able to hear my neighbors having a huge tree taken down.
No, I don't hear anything. I just don't see your charts yet.
It's bugging me, Ben. If you can't hear it, then it won't bug me as much. All right. But that's all good.
Okay.
So let me just get into it.
Looks good.
Good. All right. Good afternoon, everyone. Today is Thursday, the 4th day of January, 2024. Now, if you have not taken a free trial with us and you want to, go here to mytradingiq.com, click on this button right here. That is going to bring you to this page, registration page, which you can't see right now, registration page. All we ask for is your name and your phone number. And look at that. There, you can see it. Your name, your email, your phone number. Fill out these. These are all drop downs. Down here at the bottom, load up again for me, but down there at the bottom, down here at the very bottom, we ask for your TradingView username if you have one, and your Ninja Trader machine ID if you have one, or both. You can do us both. Yeah, just do all that. That will get you started with the free trial in the morning, okay? All right, so the spreadsheet, and now the spreadsheet is giving me trouble. Well, today, if you're going to read the spreadsheet, first of all, you got to read all the CFTC risk disclosures down at the bottom. Today, as I said, it is the 4th day of January. Today, we ended up with minus 11 ticks on the NQ, plus 12 ticks on the Russell, and plus 10 ticks on the crude oil, which didn't end up with anything on the ES. This morning, it took 17 minutes and 3 tricked to $1,430 to get our goal. And you can see down here, if you were to quit trading, well, so far in the month, we're up to over 3 days, averaging $431 per contract per morning session. The same thing for the year. The whole month of January will be the same thing for the year. If we were to quit when we get our goal for so far this year, because we started out with 13, it just came around. Because we started out with 13 contracts, so far this year, we would have worked just less than an hour, just a little under an hour, and quitting when we get the goal for the day would have been up $7,085, right? Just under an hour's worth of work. So the average hourly rate right now, given what we've done, is $7,729. Now that, like I was saying earlier, is going to be a huge number by the end of the year, because last year we started out with 1 contract. This year we're starting out with 13. So yeah, picture that times 2, roughly. We'll see what it works out to at the end of the year, but it'll probably be about double what it is right now by the end of the year. Okay? All right. Let's get into the, let me do a couple of things here. I want to do that. Get the live stream ready to go here and see the question box. Okay. So the actual trades. Now, in the crude oil today, there it goes. All right. In the crude oil today, we had just a couple of trades today. Apparently I missed something in here. Yeah, we started out here with this. Okay, so we started out here with a plus 10. Then we stopped out, put us back to 0. Then right here we picked up 2 ticks. Okay, I didn't we picked up 2 ticks there. And that got us to plus 2. I picked up 8 more ticks here to get us to plus 10. That is what we did this morning. During the break, there was one more blue arrow right here that just barely put in a lower swing. So you would have gotten some profit on that one, and you would have given it right back with that one if you took it. Again, the key is to stop trading when you get your goal for the day. You could have gotten it on that one trade alone, so you wouldn't have to take that trade. I want to look at something really quick. Just really quick here. Okay. Is Twan in here right now? Twan, are you in here right now? See, Twan is not in here right now. Okay. Stephen S., you are in here, and I sent you a text message. Oh, you got it. All right. So there were no other blue arrow trades in here, just a couple of black arrow trades. Every trade that gave an indication, except for this one, would have given you some profit. These 2 right here. This one here and this one here would have given you profit. That's how it worked out with crude oil. Now for Russell, we had some trades this morning. On Russell, we had a bunch of trades on Russell and on the NQ. All right, so I'll go all the way back here. All the way back here. The Russell. All right, so our first trade of the morning was right here on the Russell. So we picked up 22 ticks on that first trade. And then the next trade was I don't think I have the next trade marked. There's a blue arrow there. We had a break even there, and then we stopped out there. So we had, I don't have it marked because we went from 22 to 52. Okay, so we had a 30 tick trade. We had a 22 tick trade where we got the goal for the day. And then we had a 30 tick trade that got us to 52. And then we had a break even, and then we started the stop outs. We had one there that put us back down to 42. Had a break even, another break even. I missed the blue arrows in there. We had another stop out there that put us back down to 32. Then we had another stop out right there that put us back down to 22. And wait, I'm not done yet. We had another stop out right there that put us back down to 12. So the Russell was given some decent trades. You know, when I was doing the lesson plan, I missed this really nice trade here. I mean, you only needed one of those to make up for all those stop outs. And it's basically what we had. One good trade, one 30 tick trade before all the stop outs. It kind of contained all the stop outs. And these yellow trades, these yellow arrows here, all those gave us a profit too. I just didn't get it. You see the blue arrows in here, we're working out pretty well. And then we get into the break. During the break, it was a great trade right here. Would have wiped out all those stop outs. And that was it. The Russell. All right. The ES. Now the ES was doing pretty much what we thought it was going to do all through here. But we didn't end up having, we did have one single trade here on the ES. We had one trade on the ES right there. It was a break even. We had one blue arrow over here that we didn't get. It was during the lesson plan. Then this was all kind of during the lesson plan. No, it wasn't. It was toward the end of the session. Okay, I'm sorry, it was toward the end of the session. But these blue arrows in here, this one right here would have been a decent trade, and this one right here, the only one of these would have mattered, the first one. And that would have been a decent trade as well. This was actually a trade there too, off the ribbon. Okay, been a ribbon trade right there. So on the ES, when it did give a trade, it gave a decent trade. But let me see. In the blue and the black and the green arrows. Daniel, are you watching right now? Up here. Daniel is not watching right now, but Christian is watching right now. Oh, you are watching. Just put your name in backwards. Okay. I'll answer that in just a minute. Okay. So during the break, there was one more blue arrow in here, and that was it during the break. Now we get into the NQ, and I will show you the difference. Let's do it this way. I don't want to do it during let me do it during the live stream, okay? Because it's going to be a little bit of a lesson plan for the live stream. Or actually, you know what? They can drop the lesson plan. Here. We just have the leading line in the ribbon and trailing line in the ribbon, right? Now, you're only going to get an arrow when price pulls out of the overbought, the oversold. If you have a black arrow, that means it did not hit any of the ribbon. If you have a black arrow, that means it pulled out of the overbought. And you're going to get an arrow when it pulls out of the overbought or oversold. In this case, you get a black arrow when it pulls out of the overbought and it has not touched the ribbon at all. You get a blue arrow when it pulls out of the overbought and it just barely touched the ribbon. You get a green arrow when it pulls out of the overbought and it touched the black line in the ribbon. So if price touches the black line in the ribbon and it pulls out of the overbought, you get a green arrow. If price just barely touches the ribbon and pulls out of the overbought, you get a blue arrow. If price doesn't touch the ribbon and it pulls out of the overbought, you get a black arrow. That's the difference. Okay? That is the difference. So if we go back here, you will see how all those things came together. All the arrows that we had this morning. Now we started out right here with the NQ. We had a break even on that very first trade. I could have gotten the goal for the day pretty easy on that, but that was right at the open, remember. And I had the break even, and then I didn't trade it again until over here. My first trade on the NQ, we got 4 ticks right there. Then I missed, and I missed that one. And I missed another one in here where I stopped out. It was minus 20. I don't know where I put that stop out, but there was a minus 20 in there somewhere. Because I went from minus... There's something's messed up in my numbers here. But anyway, the next number that I have is minus 16. So I think we went from minus 16 to minus 14. I think I picked up 4 ticks on this one. This is the NQ, right? 4 ticks on that, then another break even, then this stop out. Okay, so there was something mixed up in here. My first trade of the day on the NQ was minus 4 ticks. How could it be minus 4 ticks? It was plus 4 ticks. Okay, that's what it was. My first trade of the day was plus 4 ticks. That's what I'm messing up. This was a plus 4. Then I had a break even. Then I had a minus 20. That put us at minus 16. That makes sense. Okay, and then the next trade that I had was a plus 4 right there. And a plus 2. That put me at minus 14. Then the next trade was a plus 4. Another plus 2 that put me at minus 12. And then the final trade that I had on the NQ was a 1-tick trade. I don't know where it was, but it put me at minus 11. That is what the NQ did to me today. I did have some decent trades in there. I just didn't get into the decent ones. During the break here, it doesn't look like it had much. It had break even, and nothing else. And that was it. All right. So it is now time to start the live stream. So I'm going to click that button over here. And we'll start the live stream up. Okay. There is no difference between the green and the blue, only matter of how deep the pullback is, right? That is true. They both hit the ribbon and they both come out of the overbought, the oversold. The blue higher probability, right? The blue ones tend to work better because it's not pulling back as deep. It's just a shorter pullback. It's just like pulls into a sweet spot is what the blue one is. Okay, that's what the blue arrows are. And like this right here would have been the equivalent of a blue arrow if you hit the overbought, because it didn't go so deep into it. It's possible if we got a down close on this that it might not consider this of the black spot and the black line right there. And that would give you a blue arrow if it does not consider that hit of it. I'd have to look at the exact numbers, but see, we had the green one over here, so the green one should put in a higher swing. And we did put in a lower one here from the blue arrows. So right now, that's what we're looking at. Okay, we're looking at a possible short right in here on the ES. Let me see, do I have my ES down going? I do have an ES down going, and this has got a high here, 48.25, so you'd be selling 46.25. And for those of you guys that are watching the live stream, anybody that is watching the live stream right now, we are trading 13 contracts right now. We started at 2023, January 2023, a year ago with 1 contract. And we've added 1 contract a month. To get to that 1 contract per month addition, last year, we had to make $2,000 per month per contract. So we did all that right through here. $2,000 per month per contract. We did all that all through here. And that was what we did through there. Okay. So now we ended with 12 contracts last week at the end of the month in December. And we had to make $24,000 of contracts, quitting when I get the goal for the day. So in the room, quitting when I get the goal. It took 932 minutes last month to do that all month. And we're at $29,000 with 12 contracts. So far this month, we've traded in the room for 55 minutes, getting the goal. And in those 55 minutes, we're up $7,085. By the end of this month, because we have 13 contracts, we have to be at $26,000 quitting when I get the goal for the day. Okay, that's what we do the next contract next month. All right, so the ES is pulled back a little bit deeper here now. It's bounced off to the tick here off the weekly trading zone. It'll probably go back down there as long as the pullback doesn't go back any deeper. If you get enough close on this bar, we're probably not going to trade at all. But right now, it'll be 48.50 down to 46.50 is what you'd be selling on the ES. Okay, while I was showing you all that, we had a blue arrow over here. And this one, Daniel, you see it pulled back, but it didn't. It looks like it did, but it didn't actually hit the black in there. You see, there's just a little tiny bit of space in there. It didn't hit the black. That's why you have a blue arrow there instead of a green arrow. The blue arrow being your highest probability trade. Okay, it finds that sweet spot in there and just bounces off it. And so over here, this number is changing, and it's probably not going to be in a trade here on the ES. It's now 49.25 down to 47.25 is what you'd be looking at for a little green arrow trade. All right, you got to deep into the ribbon here. It's not going to give you a blue arrow. If it gives you anything at all, it's going to give you a green arrow. But there's a chance it will give you nothing. Okay. This green arrow over here, after you get a green arrow or a blue arrow, it has to put in a higher swing. It has to continue the trend. We are trading the trend here. Now you see this is almost pulled down and touching the ribbon right here. So we're not in the oversold, so you're not going to get any kind of an arrow, right? But it is touching the ribbon. So it's going to be a valid trade on an up close, regardless of what happens down here. If this gives us an up close, it's a valid trade on the NQ. It's going to be 504 up to 508. I don't know where my NQ DOM is. Let me find it. NQ DOM is right here. 504 up to 508 is what you're looking at on that. Okay, it's got a low here of 504, so 4 points above that will be 1 tick above the high of the bar. All right, so this is what it looks like in the DOM. And my buy stop limit went on right there at 508. This is a valid trade. Now, after it goes 8 ticks into profit, I want my stop to break even. It's going to get up to right here, above the stop. There it is. It's stop to break even. And now we're just going to let it play out. All right, I have a 30 tick profit target on it. It should get at a minimum period of 12.25 right up here. Right, that's where it should go at minimum. Now, sure, it gave me some slippage on that. It didn't end up being a trade. It went to a no trade zone, but we ended up getting a break even on that. Well, we'll call it a break even, but I'm sure I slipped some on that. You saw how quickly it didn't execute. Okay, over here on the crude oil right now, we just did put in a higher swing, but we also went right into a no trade zone. Now, one of the questions from this morning was, why do you have a no trade zone? What makes it a no trade zone? And the thing that makes it a no trade zone is when everything gets flat, when the outer band gets flat, the ribbon gets flat, then you're getting into some choppy period there, and you really don't want to trade when it's like that. Okay, that makes it a no trade zone. And I don't really think about it all that much because I'm doing this all the time. But the no trade zone is something that's really good for people who are just starting out, because people who are just starting out get chewed up in this stuff right here. We might take a trade right here and it'll give you a break even, but then you think it's going to go again, give you a break even, then you right here you stop out to the tick, and it doesn't build confidence in what you're doing. Okay, so we ended up with a break even over here. We didn't put in a higher swing from the trade that we did take. We ended up with a break even, so I can't take trade in that direction until it puts in a higher swing. All right, the crude oil is moving up nicely here. Now, this is one of those ones, if you got in at exactly the right spot, you got really close to stopping out, but it kept going up. Okay, it didn't stop you out. Anybody wants to see any other symbols, or anybody has any questions about anything, you just have to type into either the message box, the question box, the live stream box, in one of the boxes that are open here. Okay, and Clive, you should have gotten your email, and Jeff, you never texted me back when I asked you if you wanted to meet, and Daniel answered your question. Everybody else, Steven, you didn't text me back either. Vora. I feel like you haven't taken the trial. Is that right? Or if you're watching in the live stream right now, the only way to get access to the indicators is to take the free trial. You have to go here to mytradingiq.com and click on this button to get free trial. It's going to be into this registration page. Just fill out the form. No credit card required. It's all just a bunch of droxes, like that stuff, and that stuff, and that stuff. Just answer them honestly, right? If you answer it like this one particularly, you answer this one wrong, like you pretend that you are a partner, you're not going to get a free trial, right? Because it's not going to send you an email if you're already a partner. You don't need a free trial. But down here, give us your TradingView login ID or your machine ID, whatever applies to you, okay? That is how you take a free trial. If you're watching the live stream, you should do that. All right, so on the crude oil right now, we're starting to pull back a little bit. We're not quite there. On the Russell, we're pulling back. We could have a trade setting up here on the Russell. You see we're oversold down here. So that could happen here in the next few minutes. And the NQ is going into a no trade zone. The ES is in a no trade zone. So we don't have anything that we can trade with those right now. Okay. we'll try to plan on that tomorrow. Then tomorrow at 12. Okay. You gotta remind me tomorrow morning though. Okay. I have to do a quick one at 12 because that's in the middle of stuff that I always have other stuff going on. The Russell's got a green arrow long trade right here. All right. So from here, the DOM's not really giving us much information because the DOM's not acting normal right now, but it should get up at a minimum up here to 79.6. 79.6. Okay. So the entry point, the best entry point would have been here at 78.4. 78.4 would have been the best entry point. Okay. And I did not get the best entry point. It's 78.7. I always get slippage. When you have a whole bunch of contracts like this, you get slippage. And it's just part of the process. Trading the thin markets like this. I get slippage on the ES, but not as much. I got 3 ticks slip on this. And it just me out. If I didn't get the slippage, I would have had my stop at break even. But it is what it is. Okay, so now here on the crude oil, we had a nice run up and we're pulling back. We could get down here into the oversold, or we have to hit the ribbon. One or both of those things need to happen. Okay. So on the Russell, we have one little stop out so far. Okay. 12-year time. I don't know about 12-year time. It's all my time. And 12-year time is 3 my time. I might be able to do that anyway, Stephen. Okay. Let's check and see, because I know I have a couple of things outstanding tomorrow. At 12 my time, I can do for sure. 12 your time, I'm not sure. Okay. Because you are Pacific, right? Yeah, it's Pacific time. We need to get down into the. No, it'd be 3. It'd be 3 p.m. my time. It goes the other way. Oh, yeah, I could do 12 my time. That would be 9 a.m. his time. Yeah, 9 a.m. his time. Yeah, okay. Yeah. All right, I got the backwards sent. Be 9 a.m. Stevens time. So we'll work out the details tomorrow. I know I have 2 other meetings. I have to go through all my messages and find out. But I know there are 2 other ones outstanding. Greg is one of them. And I feel like there was another one. Just can't remember. Off the top of my head, I just wrote it down somewhere, probably. See, Valerie used to take care of all this stuff for me. All right, on the crude right now, we want to get down and hit the ribbon, and it's just about doing that. We're in the oversold, and we're just about hitting the ribbon. So right now, if we get an up close on the crude, add 8 ticks to the bottom of that bar, that's going to put you up at 32. So you'd be buying on that, okay, like this. And there it is. And it just triggered me in, and it just slipped me 3 ticks. Okay, well, that's no fun, but it is what it is. So I'm going to bump my stop to break even. And we'll be looking for it to get up here to 72.45. 72.45 at a minimum up here. Okay, that's what it should do right now. Highest probability trade with blue arrow. The proper entry would have been right here, 72.31, 32. I'm in at 35 because they gave me so much. That happens. Okay, it should still work out. It should still go up here to 72.45, 46. And normally we can see 15 spaces out in the DOM, but for some reason the last few weeks the DOM hasn't been acting right. So I can't see all the information that I can normally see in the DOM, but I'm pretty sure if we get up here, you're going to start seeing big numbers up here. Okay, you just can't see it right now. They're probably there. All right, all 3 of these other markets are in no trade zones. It can. It did not this time, but it can happen. The last one. sadly, I got stopped out on that one. Again, on that one, if I had gotten it exactly right, 32, it went up to 36. I wouldn't have gotten it exactly right, I don't think. 32 to 36, I might have gotten filled at 32 with one contract, and I would have bought my stop to break even at 36. The same thing happened over here. If I'd have gotten it exactly right with one contract, I'd have gotten my stop to break even. But I mean, we knew this was going to happen when we started getting to a lot of contracts, that the slippage was going to become an issue on the thin markets like this one and this one. And this one over here. So it is what it is. I'm sure we'll get it back. I'm not worried about it. Okay, so here, this right here, you see how the black line is not in the green anymore. Spread this out, you can see. Black line is not in the green anymore, so there is no trade here. Okay, no trade. Live stream just said it was disconnected for a second there for me. I don't know if it sounded that way for you guys, but I just reconnected and it should be good. Okay, good. So this stopped us out pretty much to the tick. It should run up here and put in a higher swing. Okay, it should do that. Okay, let me look over here. Okay. So I'm waiting for more trades now. It is now 1:18. We only have about 12 minutes left. And sadly today we had a stop out here and a stop out here. Both of them are winding up going in the direction that they should have gone in. And if I didn't have slippage, we would have gotten out a break even with them. But it is what it is. You know, the indication was right. It just pulled back a little deeper than our stop would allow. So it's part of the process. Okay. We don't have any trades here. Let's go look at the other things here quickly. Bitcoin is starting to get back up, hitting back upward where it should go. Oops. Where it should go based on all the structure. See, we're still inside the channel now, and it should go up and exceed the top of the channel and get up to here. I don't know what's going to make it do that, but that's what it needs to do right now to finish doing what we think it's going to do here. That was Bitcoin. And what was that other one? Mara. M-A-R-A. Come on, put the other A on there. There it is. Marathon Digital Holdings. That is bouncing off of here. Yeah. That's, look, it went all the way down here. Yep. So it's doing exactly what it should do, really. And given all the stuff that we've done over the years, and the way that it marks in regard to the indicators that we have, it's doing exactly what it should do right now. We just about have a high swing over here on the crude oil, so that turned out to be a really nice trade. This Russell trade pulled back quite a bit deeper. I would have gotten a break even on that. It takes a slip. Same thing here. I think it was, yeah, Mr. Yep, it's Mr. Look at that one. MSTR. Mr. All right, so that is doing kind of what we thought. We're thinking that's going to get down here to the BBC as well. It bounced off a little bit more here than I would have thought. The pullback of this leg up right here, you know, it ended up, well, it's got this gap way back here, but it's got this gap here that it's got to fill But if you look at the whole thing, this leg length here drawn from here. So if I'm looking at the midpoint on this leg length, that's right at the ribbon, right at the BBC. But if you look at the leg length of the actual move, if you look at the 50% retracement, that's right there at the same place, right there. That's 50% retracement. So retrace 62%. Yeah, they take a long time. I mean, depending how it is, they may never fill. You know, those what we were looking at yesterday it had a gap down and then it had a gap up to fill that gap down. So it was just like two gaps in the pattern on the chart. It was, you know, it was like on the chart. It was like you had all this, and then there was a gap down to here, and you had all this, and then there was a gap up to here. And so you had these two gaps. Okay, yeah, it's all the stuff. Right now, we really don't have anything else going on. We have like 7 minutes left in here, and we've had the one move here on crude, didn't put in a higher swing. We had the one move here on the Russell, did put in a higher swing, but I didn't take this over here because it wasn't a valid trade. Neither was this right here a valid trade. The other marks just haven't given us anything yet. So anybody that's watching in the live stream, if you have not taken a free trial with us and you want to, the only way to get access to the indicators is to take a free trial. You got to go to here, tradingiq.com. Go there, click on it. That is what we do. With your free trial. All right. Fill out the registration form. And do we send everything you need to get into the room? I don't know why I clicked on this, but I'm on it, so I'll just describe it anyway. This is our spreadsheet. This spreadsheet goes back to 2013, January 2nd of 2013. So there's a full 10 years of data. We're going into the 11th year of data right now in the spreadsheet, and we fill it out at the end of every session in the morning. So last year we ended with $106,304 with one contract, just in the morning session, averaging $430 per day last year. So far this year, we're at $1,295 after 3 days, averaging $431 per day so far. So we're consistent, 430, 431. And that is spending half of the morning session training. Okay. The year before, in 2022, we ended with about $950 per day was our average, but we didn't spend any time training in the morning. Now we take half the morning session and spend it training, helping you guys learn how to do what we do. All right. Here, we don't have a trade here because we didn't put in a higher swing. We might have a trade here if it pulls back and hits the ribbon. We're not in the ribbon, so we don't have anything yet. Okay. Yeah, that's it. That's all we got. The ES, if we look at the ES right now, we had these nice blue arrows here during the break. Blue arrows, blue arrows. The blue arrows are the highest probability trade. The price pulls back up and just touches the ribbon, and it comes out of the overbought or oversold. Now, the only thing the slingshot is for with TradingView, the only thing the slingshot is for in here, right? The last thing that triggers an arrow is when price comes out of the overbought or the oversold, depending on what direction you're going in. The last thing. These little arrows tell you everything else is in place. So all you need to do is come out of the overbought or the oversold. That's what the little arrows tell you. They say everything else is in place. Just pay attention. If it comes out of the overbought or oversold, you're going to get the arrow. And you have to determine if you want to take a black arrow. You'll know when it's coming Because you're not going to be ribbon, you're going to be coming out of the overbought or oversold, but you're not in ribbon, so you know the black arrow is coming. So you have to determine whether you want to take that black arrow. If you have enough space between the entry and the swing high or the swing low, if the outer band is the right color, red for short or blue for long, then you have to decide whether you want to take that.
That gap lower that you saw, or that we saw in Mr. The CEO, Michael Saylor, he sold $216 million in stock options so that he could buy more BTC. So, I mean, when you have all at one time, 216 million get sold, I mean, that's going to have obviously an impact on the price of the stock. So, I mean, there's a fundamental reason behind that dip. And anyway, just want to throw that out there.
Okay. Well, that kind of explains what's going on here. And that's good. I mean, it's good to know, because you anticipate that it's going to get filled and it's going to keep going up, right? If we were to look at everything that we were looking at here, we've set a thing. So it really didn't pull back very deep here. Now, if it gets down to the ribbon, let's say it does get down to the ribbon, to BBC right there, then the next spot would be up here at 830 is what you would anticipate that's going to run up to, right? That's what you'd be anticipating, a move up to 830. Let me see if I can draw something there. Here, I'll put these in circles here. Yeah, when you get up close to $1,000 a share, that's when they start saying, make it more affordable for other people to participate. Okay, but that would make sense. If it does pull back down to the ribbon, that would make sense for it to run up to that spot. Now, how long did it take to get from here to here? That's important, right? Yeah, you can buy partial things, yeah. Yep. Yeah. And then you got to think about that though. If MicroStrategy then goes up $10, you don't make $10. Whatever the percentage is that MicroStrategy increased is what on your money. That's the way that it works out. Just when if you had one share of MicroStrategy and it goes up $10, then you get $10. But if you have half a share of MicroStrategy and it goes up $10, then you only get $5. So make sure that people understand you're working with percentages then, rather than just round numbers as the price goes up and down. It's not one for one. We work with percentages. All right, so we have a minute left, and we have just about a trade set up here on the Russell. We have a higher swing. We pull back down. We're testing the ribbon. We're not in the oversold, so you're not going to get it. You're not going to get an arrow here, okay? Because we're not coming out of the oversold. Remember, the ribbon, the slingshot is only to give you the arrows. So we're not going to get an arrow because we're not coming out of the oversold, but we are touching the ribbon. So this would be the equivalent. If you got enough close on this bar right now, it would be the equivalent of a blue arrow, which is the highest probability trade. It's a pullback to test the ribbon while the ribbon is holding. And if it pushes up off it, then that would be the equivalent of a blue arrow. It just didn't pull back deep enough to get the slingshot down into the oversold. Back in the day on NinjaTrader or DT Pro, we'd call that a momentum trade. Okay, where it didn't pull the slingshot way back. And if we actually put the old slingshot on here, the old school slingshot. Yep, yeah, I didn't even see it. Thank you. I had a nice blue arrow right there. This is working out just fine. And this is the up close right there that I was talking about on the Russell. And see, the old slingshot is saying this should work out too. It's not really a great looking slingshot the way this we're up here in the overbought area, but it's still okay. It's still a valid trade setup and it's still working out, and I'm still going to buy myself to break even on it. I didn't get the NQ trade, but I did jump into the Russell trade just to put that up close there. Okay, let's slide this off to the side. I guess I can leave it here. We'll let it play out. I know I just ran out of time, but we'll let this play out a little bit here. Now, when it gets up to the high, to the prior swing high, which is at right now, that's when you want to lock in some profit, because there, right there is where it's trying to get up to, 81.7. So we'll go for that. That'd be 13 ticks. You guys from the room this morning that were watching in the room this morning, you see why that's getting up there, right? See why I'm saying that? It's not really showing anything else above it, so we'll just go with that for right now. And there it is. Ding ding. 13 ticks. We had the there, so we made up. Oops, we made up for what we stopped out on that one earlier, and we had the opportunity over here to take some profit too. Okay. Again, if you're in here and you haven't taken a free trial, to take it, go to mytradingiq.com. The only way to get access to the indicators is to sign up for the free trial. Access to one-on-one training with us. You get access to the live room in the morning, 5 consecutive business days, and all that and more. The trial really is free. There's no credit card required. All right. That's it. With that, I'm going to select out fabulous Phoenix, Arizona, Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yes, sir. I'm ready. Okay, recap of the morning session.
Today it took 17 minutes and 3 trades to get to $1,430.
Great job.
Thank you.
All right, guys, we were on the Dow, and for anybody who arrived late, I'll put this up again because this broadcast is open to the public. So all of our traders and even our trial members received these targets last night, 10 minutes after the open. Okay, so you can grab a screenshot, or if you're watching after the fact, you can hit pause on the video on our YouTube channel, youtube.com/CFRN. Make note of just, the numbers that apply to markets that you trade. Okay. And then at the beginning of this broadcast, I explained all kinds of other stuff, so you can go back and watch that later on the YouTube channel as well. So the ES, here's what's happened. Price got back below the BBC, came back down to the target again. We were talking about this as it was happening. We're on this candle. Now, blue and climbing looks like it's about to turn red and falling. So if we take out the low of this candle, $47.45 down to the zone at 47.42/43. A nice 2 points. Okay. So the Dow again. Already covered all this. When price rallies up to a zone, expect resistance. When price drops to a zone, expect support until proven otherwise. And the pullback to the BBC holds more often than it doesn't, as it's doing on the daily. On the Russell, here's where we opened last night, and we were trapped immediately. Support below, resistance above. See how the pullback held? Consolidation at the zone. Remember I told you, only 3 things happen at a zone when price gets to a zone. 70% of the time is this, consolidation. Consolidation. 20% of the time, rejection. 10% of the time, the slice. So we consolidated along the BBC till blue and climbing, turned to red and falling, and that was your cue to sell the open of this candle right here at 1983, and it dropped 9 points to the target, and it continued dropping. So just because price hits a target, if there's nothing on your chart telling you you should exit the trade, you can ride it out. See, when this candle opened, it continued lower. But once that thing, buyers came in and pushed it back up to where it opened, the second it turned green, you would absolutely want to be out of that trade. Because when the market finds support, it's going to go look for resistance. When it finds resistance, it's going to look for support. It's just how markets work. On the NQ, here's where we opened. Price trapped, pulled up to the BBC. We tried to go higher. I mean, this green candle here, this was valid. It opened at I don't want to widen it out. It won't be so hard. Opened at 569. Let's just call it 570. And ran up to 582. That's over $200 per contract traded right there. However, I wouldn't have really considered trading to the long target. Again, I mean, that was your goal for the day and then some, but you got to expect resistance here. See how when price got below and pulled up, resistance, yeah, okay. So we've come down, traded through the short target. Got back above the BBC, but when we ran into that resistance established earlier in the session, sent the market back down to support. Now by close of business tomorrow, Friday, we expect price to be at or above the lowest weekly trading zone. Is that how it plays out every week? Well, we've published the zone since December 14th of 2009. And yes, there have been a handful of weeks where that didn't play out. Maybe a couple of handfuls. But that doesn't change our thinking. It doesn't change our strategy because history bears it out. We've seen it happen repeatedly again and again and again and again. So we don't question it. Just understand that's how markets work. So right now price is trapped. Resistance at the BBC, support at blue and climbing. Will be a winner. Price will either get above the BBC, and if it does, we'll have a nice window of opportunity here. And if price breaks below that low right there, we'll have a nice window right there. Okay. So by the time we are having this conversation tomorrow on this broadcast, one of these two windows will have filled. In fact, if you remember, there's a good chance that by the time we get into that meeting tonight, the members only workshop, one of these two windows will have filled. And guess what? We don't care which window, right? Money's money. We either get it on the long side or get it on the short side. And look how that pullback just holds, and it holds, and it holds. Even when you spike it, it still ends up holding. But eventually price trades through, okay? This little instance here, it actually traded through. That wick is not touching the BBC. Price opened here, traveled up to here. Okay. Remember, there was $200 potential in just that one candle. And that was at 2 a.m. Eastern in the morning. So look at these bigger candles. Just it's $20 a point. Okay. From 16,480 to 16,481. That's 1 point. $20. So when you go from 480 to 490, that's 10 points. At $20 a point, $200 per contract traded. Once you earn the right to trade 10 contracts, then it's $2,000. Okay. But first you have to learn strategy. You have to learn to read the charts. You have to understand what the indicators are telling you. You have to be able to look at a chart and know instinctively what the next high probability move is. And when there's situations like this where, gee, this could go either way because you got support here, you got resistance here. Okay. Well, then I'm going to go down here and find a window of opportunity. I'm going to go up here and find a window of opportunity and just sit here and watch the chart until price gets to this window or gets to this window. And then on my 7-tick range chart, I'll pull the trigger at the appropriate time. Okay, that covers all the indices. Crude oil. Here's where we opened last night. Price was up against resistance, resistance, resistance. We're above the BBC, so at this point, we're not thinking about the short target, okay? We're above the BBC. We're trapped, though. Resistance overhead, support below. Opposite of what we saw in the indices. Then we close above red and falling. Red and falling turns to blue and climbing. This candle opens at 73.19. Let's just call it 73.20. And runs up to 73.40. It's $200 per contract traded. $2,000 for the 10 contract trader. And then price pulls back into blue and climbing. Hits the target. Exceeds the target. Right here. Now you can learn how to do that. You won't learn it overnight. See how the step line here crossed red and falling? When that happens, what do we expect? A pull back to the BBC. We know the pullback holds more often than not. So we hit the long target, and we got below the BBC, and we got below the zone. That's important because that's potential support. See, the first time down, well, the second time, because the zone is 72.75/72.80. So right here we came within 4 ticks of the zone and bounced. And then we spiked the zone and bounced. And then this candle right here. You could have got in on this candle, but this candle open at 72.20. And drop to 71.10. Let's just call it 71.20. From 72.20 to 71.20. That's $2,000 per contract traded. And that one candle. When the price of crude moves $1 from 71.20 to 72.20, that's $1,000 per contract traded. This is a $2,000 per contract move. $20,000 for the 10 contract trader. Just don't put the cart before the horse. It's the worst mistake you can make. Come into town like some kind of gunslinger, start pulling that trigger left and right. That is the surefire guaranteed way to get out of the trading business. Okay? Just because you have money doesn't mean you should throw it away. You should be a good steward. should be thankful and grateful that God has provided you with this money. Okay, however much it is. But be a good steward. Okay, don't just go pulling the trigger willy-nilly. Learn the strategy. Learn the indicators. Know what the next high probability move is instinctively. In fact, our 24/20 blueprint will put you through a process where you have to put together 10 consecutive days in a row in your demo account. You reach your goal in 10 trades or less before you even think about trading live money, real money. Okay? Now, we can't make you stick to that. But boy, do we hammer it in the blueprint. Okay? If you don't have this patience and self-discipline to put together 10 consecutive days in a row in SIM, you probably don't have the patience and self-discipline to become a trader. Okay? So if that's your Achilles heel, work on that part. Work on the patience. Work on the self-discipline. Okay? Now, once you put together 10 consecutive days in a row in SIM where you reach your goal, Blueprint gives you the green light to go live with one contract. And you're going to fund that with your startup capital, whatever money you use to open your account. Your goal, now that you're trading real money, is to increase your account balance by $2,000. Once you accomplish that, the Blueprint gives you the green light to add a second contract. Big difference is the first contract was your startup capital. The second contract is funded with profit you earned in the market. Blueprint will tell you when it's time to add number 3, number 4, number 5, all the way up to number 20. But you only add one at a time when it's time, and you only add with profit you earned in the market. If you have the self-discipline to stick to that formula, then it makes blowing up another account not impossible, but you will have to break some rules. So crude seems to be in no hurry to pull up, so that's what the next high probability move is, up to the BVC, where we expect resistance, and then once it starts printing red candles, then we can determine what action we want to take to the downside. But what if buyers are suddenly very committed and they push us up above this zone? Okay, not a problem. You just have to look for the obstacle to the trade. Okay, the zone's 72.75/72.80. So you want to get up to at least 72.90 before you think about entering the trade. And then, see that wick right there? And then you see that bearish cross? Whenever you have a bearish cross that leads to an extended move, first time price revisits that area will almost always be good resistance, at least the first time. Okay? Same's true of a bullish cross. Look at this bullish cross, where the blue line got above the green line. Bullish cross, extended move. The first time price comes back down, expect support. That's why the target's where it's at. Because we expect support here if the market continues lower. And of course, you'll learn all this in your unlimited one-on-one mentoring sessions when you become a passport holder. On gold, man, what a move down in gold yesterday. That's from 2070 to 2040. That's a $3,000 per contract right there. You're looking at $3,000 per contract. 30 grand for the 10 contract trader? Yeah, true story. So here's the open last night. 10 minutes into this candle, targets went out, price dropped to the zone, which we expect to be support till proven otherwise. And then get above the BBC, get above blue and climbing. This candle opens at 2051.7 and goes up to 2053.8. It's $200 per contract traded in that one candle right there. Now, price always reverts to the mean, and the pullback holds more often than not. Pullback held, up we go again. Leg and a retracement, a leg and a retracement. So we finally hit that target. Then price pulls back. Now, this pullback held, and this one, and this one. Eventually, we know it'll trade through, and it did. And once it traded through, what did it do? It pulled back to the BVC. And what happened? The pullback held. Okay. So this candle right here opened at 2052 and hit a low of 2046. $600 per contract traded for the 10 contract trader. I guess it would be $6,000. Would it not? And the zone is 2048/49. So we just been hitting the zone and bouncing, hitting the zone and bouncing. Okay. Now, if price were to get below the zone, I would highly recommend letting price get, unless you're going to do a quick in out from like 46, to 44. But I would probably wait price to take out that low, which is based on the reason price stopped here. I mean, it's clear as day. Look at the horizontal line on my cursor. Right there, see it? Okay. That's what I mean about learning to read the chart. So then we got this area here. If price comes down, gets through the zone, takes out that low, then we've got a real nice window of opportunity from 2042 down to 2039. $300 per contract traded. Silver, here's where we opened last night. Below the BBC. And you only need 2 pennies to get your goal for the day. This candle opened at 23.18 and dropped to 23.13. So that's 5 pennies, $250 per contract traded in that one candle. It did continue lower, then it pulled back to the BBC, even spiked up and touched the zone that was published Tuesday morning at 6:15 a.m. Eastern. Then we get back below the BBC, we hit the target again, then we continue dropping. And if you look back far enough, you'll find out why price stopped right there. Now we're above the BBC. Remember, you only need 2 pennies, so 23, 22 to 23. Nope, not quite enough room for me. So I wouldn't personally take this long trade. I'd like to wait for the highest probability, lowest risk. I mentioned earlier in the Logic 247 alert channel, there's now over 15,800 individual handcrafted alerts. Every one of those is a trend trade. In other words, on the 30-minute chart, if price is below the BBC, then the alerts will only be shorts. When price is above the BBC, they will only be longs. Okay. Now don't confuse the CTAs with the Logic 247s. Logic 247s are the ones where you have show you. There we go. See, I've done the looking left for you. When you see an X, that means it was stopped out. But once an alert triggers, there's a high probability it's going to trigger again. On the second trigger, it went all the way. But we only record, when we do the recap, it's the first trigger. That's what we do the recap of. Okay. ES. Sell 47.82. Target 47.80. That's your goal for the day. And then the weekly trading zone below is 47.77/78. And the swing low at the time Valerie was doing the recap was 47.77 and a quarter. So right inside the zone. Short on silver, short on crude, short on gold. Initial target. That's designed to help you get your goal for the day. That's what the T is, initial target. And the second target, or potential support. That's because I've looked left for you to spot obstacles. Okay. And the weekly trading zone is 61.62, but it spiked below the zone. Dropped all the way down to 60.6. Whenever you see the Z's, that means time ran out. We only have 48 hours to go in and edit the recap, okay? So as that time approaches, we have to just go ahead and stick this in there. That does not mean the alert's dead. Oh, no. You should continue to watch that if it's a market that you trade. Remember, you should just get your goal for the day and put the mouse away. But just because it says no trigger here, that just means our window for editing this ran out. If you go back and look at the chart, there's a high probability that it actually did exactly what we thought it would do. Long on crude, short on silver, short on gold, short on bonds, short on crude, short on the ES. Now, from 48.11 to 48.09, that's your goal for the day right there. Potential support or target number 2. Potential support, target number 3. Final trade to target, target number 4. And at the time Valerie did the recap, price had dropped to 47.96.5. So that would be, let's just go with the zone. 11 plus 2 is 13 times $50 a point. Per contract traded. NQ, short 17,000, initial target. The final trade to target is always the weekly zone below on a short, the weekly zone above on a long. This thing dropped all the way to 16,845. Now, you see, you only need 10 points. Actually, you only need 5 points to get your goal for the day. But with the NQ, see, the initial target on every one of these is $100 per contract traded. The only exception is the NQ, where the initial target, 10 points, $20 a point, $200 per contract traded, because of the volatility of the NQ. Here's a short on the Dow, short on the Euro, long on silver, initial target, second target, potential resistance, final trade to target. Long on the ES, long on the Dow. No trigger on the NQ at that point. Okay, so at least you know what those look like. Let's get this out of the way. Drag it down. And we're on the Euro, last market. So we opened. Looks like we were going to drop. Okay, so it's possible you could have got stopped out on this one. But really, you shouldn't enter until you take out this low right here. The window of opportunity was all across here down to the target. Okay, this low matched this low, but it did not take it out. And we get above the BBC, red and falling turns to blue and climbing, takes us up to the zone. We spike the zone. See, this was a green candle all the way up. Or we slice through the zone. Then price retraces to the zone it sliced through and continues in the direction of the slice. And in doing so, hitting the target. Now, what was resistance on the way up, the zone, on the pullback, the zone and the BBC, that's what we call support times 2. Boom. Another nice run. And right now, just sitting on top of the zone. So, if I were going to trade this short, I'd wait for price to get back down here. If I was going to trade it long, I'd wait for price to get up here. Trade it up to the zone. Don't want to get caught up in all this claptrap. Okay, well, we talked about market bouncing, and it did bounce, but it's starting to look weak. Remember, it was a green body all the way up to the top of the wick. Now we have a red body. And we've spiked the BBC just the tiniest bit. Okay? But remember, I said the path, even though the pullback holds more often than not, it's been so long since we had a pullback on the daily chart, it wouldn't surprise me if this is the one that doesn't hold. Okay? That's why in the discussion group last night, I outlined and showed you earlier in this broadcast every area where you should expect potential support on the downside and all the prices where you should expect resistance on the upside. So if you missed it, about an hour after we wrap this up, you can go to youtube.com/CFRN and watch everything in its entirety. You can also become a lifetime member today with no recurring fees, no upsells, no nonsense, ever. Pay once, member for life. MyTradingIQ.com. If you have questions, call 949-42-EMINI or send an email to support@cfrn.net. 9 out of 10 new traders fail because they don't have anyone to teach them how to do the job. They buy books, videos, courses, but that's just no replacement for a living, breathing teacher who will interact with you 2 hours and 15 minutes every trading day. showing you exactly how to trade, answering all of your questions while you trade along. That's the best model for teaching and learning that we could come up with. Along with that, as a passport holder, you have access to unlimited one-on-one private mentoring. You just have to book the session. You don't pay extra money for that. It comes with the passport. Passport is your all-access pass to everything we do, everything we've ever done, and whatever we do in the future. Strategy you learn, the indicators that you own for life as a passport holder, are fluid across all markets and all time frames. Individual stocks, futures, crypto, forex, ETF. Price flows the same across all markets and all time frames. Support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. As a passport holder, you'll receive the Logic 247 alerts, the concierge trade alerts, and you'll be able to attend the members-only workshop tonight at 8 p.m. Eastern and every Thursday night. And you'll get the key to the channel where we archive all of the previous weekly workshops. In fact, when you become a passport holder, you'll have access to probably about 10 different Telegram channels. Please be a member. And again, there's no recurring fees, no upsells, no nonsense. And as a passport holder, you have lifetime access to the weekly trading zones every Monday morning, 6:15 a.m. Eastern. Monday's a holiday. Tuesday morning, 6:15 a.m. Eastern. Let's wrap it up with our good word for the day. Yesterday, we talked about the fact that spiritual growth takes time. Today, let's talk about what babies know. Isaiah 38:19. The Father shall make known your truth to the children. A researcher at Johns Hopkins University informed us that children as young as 8 months old are capable of hearing and remembering words, good or bad. Little ears are always listening. Babies in this study, which appeared in the esteemed journal Science, were exposed to 3 taped stories for about 10 days. 2 weeks afterwards, they were tested in a lab and clearly identified the words in the stories while failing to react to words they hadn't heard. Professor Chapman, a language specialist at the University of Wisconsin at the time, emphasized the importance of this study. It demonstrates that very young children do pay attention to the sounds of language and are able to select those that are familiar. No, they may not fully understand them, but their brains are wired to record them and replay them later on. So taking the time to talk to tiny children not only teaches them language skills, but sows seeds of truth that can bloom later in life. This shouldn't surprise us. Mothers have known it intuitively for thousands of years. Words are formative. They are creative. I remember my grandmother. She never spoke anything over my life except a positive confession. Even when I did bad things. Of course she would scold me or punish me, whatever was required. But she would end it with a positive confession over my life. And me being a knucklehead, those seeds that she planted in me as a child, they didn't really bloom until I turned 37. It's when a person reaches the end of themselves that they find the beginning of God. The first words that your child hears will be spoken by you. The first music your child listens to will be chosen by you. Your child is a precious lump of clay, and you are the potter God has called to mold them. In Scripture, we read about vessels of honor and vessels of dishonor. It's in 2 Timothy. As a parent, you help to shape the kind of vessel they become. If you're wise, you will begin the godly molding process as early as possible. That's our good word for today. Thanks so much for tuning in. Wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.